Hey guys, Mike here. So I figured I'd put out a quick video before the storm hits, which I think, as you can hear, is kind of on its way. But I'm in North Florida, so we got a ways to go before that part of the hurricane gets here. But what a day in the market. I mean, I wasn't even gonna put a video out today, but what a flip this morning. I know some people are going, "What in the hell happened this morning?" Because pre-market we were down, like 1.5% on the Nasdaq. We got, you know, bad news coming out of Apple, and then of course the 10-year Treasury hit 4%, which freaked the market out. And of course, if you're wondering what Apple talked about, basically they said they're going to cut the iPhone 14 production due to weak demand, but will reportedly maintain the 90 million shipment target for this year. So of course that's not good because it's the biggest stock in the stock market. It goes down 5% pre-market, 7.5% of the S&P weighted, that is, and so it drug it down. But remember, what's the stock market? It is a drug addict, right? It needs its fix. What is its fix? Free money, cheap money, some kind of stimulus, all that fun stuff, right? Liquidity, that's what it needs, right? So what happens? You finally get, and we kind of knew eventually this would happen, not this soon, but you get a central bank that says, hey, worth lynching, right? And it was the Bank of England. Steps back into buying bonds to restore stability in their market. And of course, I mean, this is basically what that's doing, right? Because they're trying to fight liquidity. And I'm sure, the people there are just like, great. And you can forget about fighting inflation. And please hit that like, subscribe button and share the video if you get a chance. I certainly appreciate it. And the word on the street is the reason why they're doing this. And it is because their pension funds started having a lot of margin calls or something like that and liquidity issues, and so they need to step in and start stabilizing things. That's the word on the street, at least. And so, and this was a 180, right? Because I mean, they've been talking real tough, and we're tightening the ratchets down. We're going to beat inflation. Like, oh, wait a minute, liquidity crunch. Okay, we'll start buying bonds again. Here's what we do: tax cuts it is. I mean, and so I feel bad for the people over there because inflation, I mean, it was already a mess, but it's going to be even more of a mess for even a longer period of time for them now. I mean, but that doesn't it show you what a rock and a hard place they're in? I don't think there is really a right answer for them, right? I mean, because if it is true that the pension funds they have were in trouble or could be in trouble, you can't let that happen, right? And so, and they were going to start selling gilts, which I think is their bonds, I believe, and they're going to postpone that as well. And so, now we went from QT to QE, quantitative easing. And so, what the market do? It went, ooh, loving it. All right, run that inflation up, baby. Crush the middle class and the lower income class and love it. Great. And so it run up today. And if Apple wouldn't have put the news out it had, you would have seen S&P and the Nasdaq up probably 3 to 4%. It would have been like probably one of the best days ever. But Apple still lagged. But look at that. Even with that news, it was down 5%. Now it's only down like 1.5%, I think, it closed. And so, that's where we're at. And I mean, you can see right here how the market looked. I mean, look at that. Apple's only down, was at 1.26%. But you see just green across the board right there. And we sit there and look at the S&P. I told you, this right here, the bulls are not going to give it up easy. The market's not going to give it up easy. It's still resilient. You see it's got a back above that trend line. Now it's closing that gap that it made just the other day. And combined with, of course, all the bearishness with the fear and greed index being in the toilet, all the breaths from how many stocks are above the 50-day moving average, how many stocks above the 200-day moving average, all of those are in the toilet. So you get all the indicators flashing. And so, people are going to ask, well, is the rally going to continue? Who the hell knows? I mean, seriously. I mean, who knows? But this right here, remember, the market can paint its own narrative, and they go, well, if the Bank of England's doing it, that means our Fed's going to have to pivot soon too. And guess what? If there is a hint at some liquidity crisis in this country or something, yeah, they'll pivot just like that. It'll be just like that. You'll hear them talking tough one day on Monday, and then like 4 days later, boom, they'll pivot. It will happen. But is it going to happen soon? Who knows? Because you don't know, I'm sure Bank of England, when they heard that news about their pensions or whatever made them pivot so fast, they were like, ooh, okay, we got to do this. And so you want to talk about a credibility issue, by the way? That's a credibility issue, right? If I don't respect my Fed, I sure don't respect Bank of England. I mean, they're a hot mess. Like, they're all over the place right now, and so, and their citizens are paying the price, unfortunately. And it makes you definitely step back and go, man, for a bunch of PhDs, like, do any of these people know what they're doing? Like seriously, like this is the best we got to offer as far as managing our monetary policy in this country and other countries. Like it's just sad. They seem very smart when they talk, but you really start to shake your head and say, man, we may need to come up with some different qualifications for these people. I mean, seriously, it's just sad. I mean, it really is. I mean, like our Fed has 400 PhDs working in it, and it's the best we got. That's where we're at right now. But this, and that's what I'm saying. The day will come. I always say you always got to look, for something bright here, right? Just imagine when the day comes and our Fed pivots, and they will. They'll blink. You can guarantee it. I mean, because when it comes to a backbone and the Fed, unless you're saying they don't have one, they don't go in the same sentence, okay? And so they will pivot. And when they pivot, can you imagine if we've seen a day like today off the Bank of England pivoting, and start doing QE? Can you imagine? And with all the cash sitting on the sidelines, I mean, it's going to be astronomical. It's going to be something probably we've never seen before, honestly, because we've never had this much cash sitting on the sideline, and just so much like people just waiting for them to do this, right? And with the market, though, you don't know what that means, right? Is the market going to explode when they say, okay, we're done raising rates? Or is the market going to explode when they say, well, we're done running off the balance sheet or something like that, right? I mean, that's what you got to see in everything. That's why you can't time this market, especially not this market. And so, but that's why you saw the explosion today. We could easily sell back off tomorrow because, people are trying to like sweep the Apple news under the rug or something and say, well, that's no big deal just because their demand is slowing. I'm like, really? Like, yeah, it's slowing because Europe's a mess. That's one reason it's slowing. China's a mess. And I ran across an interview today with this gentleman who knows a little thing about China. And I talked about this a long time ago, and this whole story and the news meeting, everything just kind of went and fizzled out. But it was talking about China and the real estate market. And, listen very closely to what he has to say because, I think he's right, to be honest with you.
If what is going on in the world, whether it's Russia, Ukraine, whether it's central banks losing control, whatever it might be, weren't happening right now, I think what would be happening in the Chinese real estate market would be front and center for investors. I've long said that Chinese apartment prices are the most, probably after treasury bonds, most important asset class in the world. And they are declining. We are seeing a real estate problem in China over the past 18 months that the government does not seem to have a handle on. And the reason that's important, as you know, is that investment is still almost 50% of the Chinese economy, and that residential real estate is almost half of that. So residential real estate is 20 to 25% of the Chinese economy, which is a stunningly large number. They're still building 15 to 20 million flats a year. And the fact that there is a major meltdown occurring amongst the developers, both public and private over there, is a major story that's really kind of on the back pages of our financial press.
Are you saying that Evergrande is just the beginning here?
Evergrande was the start of it. That was 18 months ago. And there was another default, I think, just this overnight in a different developer. You have to understand that, like Tokyo in the late 80s, almost every large company in China has a real estate development arm. So it's not just the developers. This is endemic to the whole economy there. And I think that we ignore it at our own peril, but realize just how much of Asia is tied into China. It's a big story.
And the reason why it's not getting enough coverage is because I've tried researching it. I did a couple of videos for you guys, and people seem to like them. But when you try to research this, you can't really fact check stuff because in China, if you try to cover this in great detail and get sources and everything, they'll just shut you down, right? And you may never hear from the person again. And when you're outside China trying to get in that wall, trying to make sure it's accurate data, it's almost impossible to do it. And the last thing I remember reporting you guys saying they're telling their banks to keep lending money to these developers, even though they're in a hot mess and in trouble. The bank's got to do what the Chinese government wants it to do, and so that's what they're doing. I even read something the other day, and I couldn't get a accurate source on it, so I didn't want to say it. But honestly, I heard the other day that they're having the banks buy stocks, trying to stabilize things over there. And so, if that's true, I don't know. I don't put anything past them. But of course, people aren't going to cover that much because it's just too hard to fact check everything to make sure it's accurate what you're reporting. But yes, it is a big story, and yes, it's continued. I know there's been multiple developers that have gone under, and so it's just one of those things. I mean, it's on the list of many things he just mentioned. that if their real estate market implodes, can you just imagine? I mean, just try to imagine that. You see what happened when our real estate market went under for a long time. I mean, what it did to everybody. Theirs is huge, and I can't even. I mean, it'd just be a disaster. But we'll be the last ones to know that one. Trust me. But that's just one of those things. You wake up one day, and people go, "Oh my God!" The only way we'll find out is the BlackRock and all the rest of these companies, which by the way are upping their bets, a lot of them, in China, even though they're losing a lot of money buying that debt up. They still, I guess, continue to just double down or something, and don't mean they're right, but that's how we'll find out about it. And so, but I just want to bring that to you. And again, is the market going to continue to go up tomorrow? Who knows? You're in this market. Your guess is as good as mine. I can guarantee you, a lot of people got burned this morning trying to buy puts and stuff this morning, and all of a sudden that market started to rip, and they got left in the dust. That's exactly, I can guarantee you what happened. So, anyway, I don't know if I'll be able to do a video tomorrow because hurricane's supposed to be here by then. But we'll find out. Figured I'd put one more out just for the heck of it. So, appreciate all your support and everything in the comments. Made it to 50,000 subscribers. Thank you so much for that. I really, really appreciate it. Just a personal milestone I can check off the list, I guess. So, appreciate it. Everybody stay safe out there, and I'll see you when I see you.